Hey guys, welcome back to the channel. Coming to you from Charleston, South Carolina. Hope you had a great day. Hope you enjoyed watching today's trading action, because we saw over the weekend retail investors just threw their hands up in the air when we saw Thursday that post Micron earnings and what happened with Micron on Thursday and the tech sector overall. And then on Friday, we saw that aggressive dump of the HDD players, the storage titans overall. But today, it gave us a masterclass in why we follow the smart money. Think about what happened in the last 48 hours. On Friday, the market convinced everyone that the storage trade was broken. Less than one trading session later, Western Digital was up more than 11%. That's why emotional investing is so expensive. Today's trading session closed with an absolute vengeance. The tech-heavy NASDAQ didn't just bounce. It skyrocketed over 2%, and it closed over 25,800 points today. And more importantly, the semiconductor space completed an absolute textbook V bottom reversal. More importantly, today's rally told us something very critical. Institutions are still buying the physical AI infrastructure layer. They're buying every layer across the infrastructure build-out every time fear creates a temporary discount. So let's dive in and take a look at what we saw today and how the market closed overall specifically. But I want to jump in and show you exactly what happened with Micron. So as you can see on your screen, we're looking at a 5-minute candle pattern for Micron. And look at that reversal that we saw. Look at what happened with Micron. It sliced all the way down to an intraday low of just over $1,000 a share. You can see how it just gapped down right from the get-go. And here it got to about $1,023 a share overall. But what happened at that point? We see retail just threw in the towel overall from Micron. But what did the institutions do? They stepped up to the plate and they absorbed every single share. They stopped that selling pressure immediately with a massive, almost 60 million shares of volume to push Micron back into the positive territory overall. And it closed the day just about $11.50 a share. And let's jump over and take a look at what it closed exactly. Then I want to show you how the hard disk drives those stocks performed today overall. But you can see here on your screen, Micron was up over 1%. It was up about $13, closed just about $11.50, but it was quite a day today. If you look at that reversal that we saw, such a beautiful kind of a V reversal. It hit the bottom. We just saw strong conviction bring it all the way back up to where the stock closed today overall. The after hours, we're seeing a little bit of pullback, about 0.5%. We're seeing it down about $7 overall, but it doesn't concern me. You see the support, you see the conviction that is there for this stock. Let's jump over and see what we saw with the HDD players. You can see here on your screen, Western Digital had a nice bounce today, an 11% jump. The stock was up by $65. You can see in the after hours, it's relatively flat. It's about 0.5% down again, $3 overall. But it was a strong day from where it started. It closed the day at 651.83. It was exactly what we predicted on the video yesterday. We talked about this mechanical air pocket this liquidation that we saw with Western Digital and Seagate, how it was just an absolute gift for us as investors. Western Digital immediately erased that liquidation that we saw at the end of last week, and it jumped by 11%, you can see. And it was about over 11 million shares in today's trading volume. Seagate rode that exact same phenomenon. You can see Seagate jumped by about $69 a share today, up over 7%, closing in on about 8% overall there. Closed at $968. You see the intraday high got it up over here to the right. You see I'm circling. It's about $990 a share almost overall. Still far away from its 52-week high, but we're moving back in the right direction. After hours is essentially flat with this stock across the board. So it was a very nice finish for both of these hard disk drive titans. These storage titans showed a great bounce back, just what we thought we would see in the tape, just what we talked about yesterday, that these stocks were artificially pushed down. They got down too far. They were oversold, and they were going to have a complete bounce back based on the demand that they have, based on the value of these two companies in the market right now. Let's take a look at SanDisk as well. First, let's jump over here and just take a look at how it's finished, and then I want to show you the reversal for SanDisk as well. But you can see that SanDisk, it ended in the red. It's about $40 down from the day, about 2% overall. If you look in the after hours of the pre-market, we're having a nice bit of a bounce back. So we're picking that back up, about $7 up, about half a share point up. Stock is currently trading at about $2,056, a share. But I want to jump over and just show you the candle pattern because it was a very similar phenomenon that we saw with Micron. And let me close out this screen. You can just see from where we gapped down right here, kind of the start for where we ended on Friday. We gapped down, pushed it all the way down to an intraday low here of $18.95 a share. But then we had a nice little step up, kind of a little more pressure right out of the get-go, a little more algorithmic selling with this stock just because of the run that it's been on recently. But then we kind of came back and just saw some nice conviction that drove the stock back up over $2,000 a share. Got it to $2,050 a share overall. So it was a nice finish, in my opinion, for SanDisk. We saw a nice kind of conviction and support that ended that rally overall today. And it wasn't a casual relief rally that we saw for these stocks today. This was a fundamental data-justified wall of institutional accumulation on all of these stocks. And I want to talk about in today's video why the bears got completely trapped today. But before we get into those stories, and before I show you the reports that justify where this sector is moving forward, I'm going to have more conviction for this sector than ever after these two reports that I'm going to share with you on today's video. But make sure you do this first before we jump in the reports. Make sure you hit like and make sure you hit subscribe to the channel. Guys, this channel is blowing up. I am so appreciative to each and every one of you for the support, the engagement, just how we're interacting together. It's awesome. It's exactly why I started this channel back in January. It's exactly what I was hoping for. You know, I had a goal of getting to 50,000 subscribers by the end of the year. I think we're going to pass that well before the end of the year, and it's all because of your support. So thank you very much. So guys, let's jump over to the report that came out this morning that just confirmed my conviction in this sector. You know, I'm a massive fan of the memory sector overall, of Micron, SanDisk, Western Digital, and Seagate. But this report that I'm going to show you that dropped this morning from Semi just confirmed my conviction overall. Let's see if it does for you. Drop a comment below after I go through it and see if it confirms to you as well. Because you may be wondering, what convinced the institutions to buy nearly 60 million shares of Micron instead of running for the exits this morning when the stock was sliding? And the answer was, it wasn't based on a rumor at all. It was based on hard industry data that I'm going to pull up right now. This is the Semi report. And the Semi projects the 300 millimeter memory equipment investment to surpass 50 billion in 2026. So let's walk through this together. And you can see the headline here. It says AI-driven demand for HBM, DDR5, and data storage lifts memory investment outlook, with spending projected to approach 80 billion by 2029. Let's walk through some of the details, and you let me know if this gives you strong conviction in this sector as well. But it says worldwide 300 millimeter fab equipment investment in the memory sector is projected to surpass 50 billion for the first time in history. It's going to happen right here in 2026, raising 29% to 52 billion before increasing another 11% to 57 billion in 2027. Semi reported today in their Fab Outlook report, the growth reflects continued AI-driven demand for advanced memory, supported by raising investment in AI infrastructure, data centers, and next-generation computing systems. Looking out further, global 300 millimeter fab equipment spending in the memory sector is expected to grow at a 19% annual compound annual growth rate from 2024 through 2029. Worldwide 300 millimeter memory capacity is also projected to increase, reaching 4.1 million wafers per month in 2026 and 4.2 million wafers per month in 2027. And if I pull up this graph, you can just see what we're looking here from a spending on the memory sector overall, where we are from where we started in 24, where we are in 26, and ultimately where it'll grow by 2029. So this is a huge jump. And what I want to dive into here is the segments overall. So if you look at this paragraph, it's highlighting the memory segment growth. DRAM equipment spending is expected to grow 29% to 37 billion this year, supported by strong HBM and DDR5 demand for GPUs and other AI accelerators. Equipment spending on 3D NAND is also projected to rise 28% to 14 billion this year, supported by increasing data storage requirements tied to AI deployment. So guys, that is a monster report. It just gave me huge convictions overall. And I think that's also why we saw this reversal, both with Micron and with SanDisk, right when you saw them sliding down and kind of got halted, the institution saw this report came out and they begin to start to accumulate shares overall for these stocks again. But here's the $1 million takeaway from this report overall for me. It's this, and it's clearly what they called out in semi. They mentioned that the technology migration and process complexity overall, even though they're spending a massive amount, it is going to take time, essentially, what the report said. They specifically highlighted that while equipment spending is scaling to astronomical heights, effective capacity growth remains highly moderated. Building advanced node DRAM and higher layer 3D NAND, it takes significantly more clean room steps, massive physical wafer footprints, and carries a lower initial manufacturing yields. So this means all this capital expenditure isn't just creating, and it's not going to create an oversupply glut. It is the bare minimum cost required to keep us with the exponential infrastructure demands that are needed by the hyperscalers overall. So that was a huge story. I think it's a massive bullish signal for us memory investors. Again, this will keep Micron and SanDisk moving. We saw it also benefit the HDD players. I think it also will benefit the South Korean players as well. But there was another story that came out today that I loved, and I have to share with each and every one of you, because we saw the noise earlier today. I talked about it in my video yesterday about Apple and Apple trying to petition to the U.S. government to buy memory chips from the Chinese. And I think the bears use some of that to drive fears and anxiety across the board. So I love this Mizuho when Jordan Klein dropped this article today. I want to walk through it because essentially what he said is ignore the Apple noise. Do not flinch and look at the real supply dynamics that are happening in the market right now. So let's walk through that article. I want to tell you what he says. You can see the title is basically ignore Apple noise. He flags the key catalyst for Micron in memory in the second half of this year. So I'll go through a few of these things. Despite the ongoing pullback in Micron shares, and this came out early this morning, we were seeing a little bit of a slide. Mizuho TMT specialist Jordan Klein is urging investors not to flinch. So Klein warns bears will likely attempt to press the stock lower on two headlines that were circulating this week. His message, neither one changes the fundamental supply picture for Micron or for the memory sector for that matter. The first catalyst we talked about was the Apple seeking U.S. government approval to source DRAM from Chinese chip maker CXMT, which appears, and we know it appears on the blacklist, and it would be a reputational risk for Apple overall. But Apple just finds itself in this desperate situation because the manufacturers now have the leverage and have the pricing power. The coin has really flipped on Apple because they love to have the pricing power and squeeze all of their suppliers, and they're getting a little bit of the squeeze right now. And you guys mentioned this in the comments, and you're spot on. But he goes on to argue right here in this paragraph. He argues that Micron has already pivoted its production mix away from consumer devices towards long-term supply agreements with hyperscalers for HBM, for low-power DDR DRAM, as well as automotive and industrial customers. Meaning Apple's potential defection, it will primarily pressure Samsung and to a lesser degree SK Hynix. It won't hit Micron. So that's a nice piece. I think it gives us a little reassurance that Micron is not going to be affected if the government allows Apple to move this route, or if Apple decides to go this route. As I mentioned, there's nothing holding them back from doing it besides just a reputational risk overall. And then the second pressure signal was a story that came out on Monday. It came out early this morning. It was a formal announcement by SK Hynix and Samsung that they're going to invest in the South Korean government, in the South Korean marketplace, essentially. They're going to partner with the South Korean government on a multi-decade semiconductor capacity expansion covering approximately 4 new memory fabs. Klein characterizes this announcement as largely political signaling, noting that there are no locked-in capital commitments expected this year or next year. Micron itself has already outlined plans for 4 new memory fabs of its own, he points out, making the Korean announcement less disruptive than the market reaction implies. So this was a good story. I liked hearing, him come out and just say, forget the noise that you're hearing, both for Apple as well as SK Hynix and Samsung committing to ramp up capacity overall, that it's just not going to matter. I think the other piece we have to think about is if you look how the memory titans have proactively insulated their balance sheets, like how Micron has insulated their balance sheets, they have purposely rotated their production mix away from low margin, highly cyclical consumer electronics. Instead, they have locked down long-term supply agreements. We keep seeing more and more, hearing more noise around those strategic customer agreements that Micron is laying down. Remember, they had 16 that they announced in their last quarterly earnings. So they've locking those down exactly for HBM and for DDR5, for LPDDR as well. So those are being tied or being provided directly to the cloud service providers, automotive networks, and industrial systems. If Apple tries to play pricing games, as Jordan lays out, if they try to play pricing games or try to force alternative sourcing, that friction will directly impact Samsung and SK Hynix, not Micron. So I want to just repeat that because I think there were some concerns about this and potentially affecting Micron in the long term. True market supply is the macro driver here, and the supply remains tightly constrained. It will remain tightly constrained in the years ahead as well. So what I want to jump to next is just talk about what we saw a little bit on the tape with the HDD players. Because if you guys remember, on Friday, we just saw a massive kind of rotation out of the storage kings, out of Western Digital and Seagate. And we talked about it on the video over the weekend, how they were just artificially pushed down. And it was an absolute gift for us as investors. So today, we saw that rotation back in. We saw, institutional investors, probably most likely retail investors as well, realize that these stocks were just undervalued in the marketplace. The institutions used the pressure that we saw on Friday, the selling we saw on Friday, as their entry point overall. Let's pull up that back. And let's just take a look at what we saw with Western Digital. I want to pull that back up. I'll go through Western Digital and Seagate together, because there was a few catalysts here that I wanted to draw out. It was mostly some price targets. New price targets we saw for Western Digital and Seagate. We got kind of a double barrel wave of institutional validation that hit the wires this morning for these storage kings overall. First, if you look at Cantor Fitzgerald, let me pull down. Cantor Fitzgerald moved up its price target for both Western Digital and Seagate. But you can see here hitting today, Cantor Fitzgerald went from, as well as Melius, they also moved up on Western Digital today. So Cantor Fitzgerald went from 660 a share to 900, so representing about a 38% upside from where the stock trades today. And we saw Melius went from no coverage, this is a new coverage starting today, to 1,050, 61% upside for Western Digital from where it sits today. We saw the same thing also happen with Seagate today. Actually, the same two houses increased their price targets. So we saw Cantor Fitzgerald went from 1,000 on Seagate to 1,300. So we're representing about a 34% upside from where the stock is trading today. And Melius also new coverage on Seagate, $1,600 price target for Seagate. I think that's the highest on the street right now. I don't remember anyone being higher, but it's a 65% upside from where the stock trades today. That is just a massive movement overall, massive new coverage overall. So that is great to see. Those two are price targets that we saw for both of those, confirm what we've been tracking on this channel for months, that the high capacity nearline drive supply is almost fully allocated and sold out for the next several quarters. Smart money, as I mentioned, they looked at Friday's mechanical liquidation and they realized that Western Digital and Seagate were sitting on an artificial technical discount. The market is beginning to realize that the premium pricing on high-capacity hard disk drives is the ultimate beneficiary of the memory tax. Today's massive 11% surge in Western Digital proved that the valuation air pocket that we talked about over the weekend was instantly treated as an accumulation window for the institutions before the closing of Q2. We know tomorrow is the last trading day in Q2, so we could expect to see some choppiness, but this is exactly what we saw. These stocks just got pushed down too far. The institution stepped in today, and they closed up that air pocket that we saw, and we saw these stocks move up by 11% with Western Digital, almost 8% with Seagate across the board. So let's go back and just talk about what we saw and wrap this video up for the day, because I think today, if we're looking forward, what is our execution strategy as we go into Tuesday, the last day of the month tomorrow, the official final bell of the second quarter? Do not expect the volatility to vanish overnight, though. Tomorrow is the absolute deadline for window dressing, fund rebalancing, and mechanical book closing. The options market delta will be moving fast, and early week choppy price action is a standard operating procedure. But your long-term playbook on this channel remains entirely unchanged. Let the short-term macro noise spin the retail crowd into a frenzy. When you look at Micron's massive, almost 60 million share accumulation floor today, and when you look at Western Digital and Seagate defying the sector drag to lead the tech complex higher, and when you ground your portfolio in a record-breaking $52 billion capital equipment surge, you realize that the structural thesis of this full AI stack is operating at maximum capacity. Remember, on this channel, we don't chase headlines. We follow capital, and capital tells us where the market is going before the headlines can catch it. The headlines will continue to change every day. The tape will continue to swing violently. But until the physical supply of advanced memory catches up with the exponential demand being created by AI infrastructure, the structural thesis hasn't broken. It has only become more valuable each and every day. That's the signal we are following on this channel. That's the signal we'll continue to follow moving forward. Guys, thanks for watching the video. Let me know your comments below. I hope you enjoyed it, and I'll see you in the next one.